Welcome, guys. It's been a while. Aqua FX. So today is Saturday. Let us prepare towards next week. So today is Saturday. It's been a while. I posted. So today I'm going to be showing you step by step on how you can grow your small account trading gold. How you can grow your small account trading gold. How you can take your $5 to $100 on a particular trade while trading gold, or how you can take $5 to $80 on a particular trade while trading gold, or how you can still take this same account to 100 and something dollars. It depends on the broker you are using. If you are using a broker like Exness and you are using unlimited leverage, unlimited leverage, that is something that's up to 3,000 leverage. But if you are using other brokers which have a leverage ranging from 1,000 to 2,000 leverages, they are still good when you want to grow your small account. So when you want to grow a small account, you should look for a broker that has a very high leverage, so that whatever profit you make, you should be able to capitalize on it. And if you lose, you lose. So while trying to grow a small account, especially while trading gold, there's this thing you should consider. One, if you are to risk $5, and this $5, your mindset is to take this $5 to a $200, or your mindset is to take this $5 to $500, what you should do is for you to only deposit $5. Even though your initial balance is $1,000 and you say this is what you want to do, please, you should withdraw your $95 out, 900 and something dollars out from the broker, or you transfer just $5 to your MT4 which you want to trade on. So that's what you should do, so that any slippage will not cause you to lose your entire $1,000. I'm saying this out of experience. You may have $100 balance in your account and you want to compound. Maybe you want to risk just $5 per trade. That is you risking 5% of your $100. You want to risk just $5 per trade for you to meet up. Maybe you want to risk $5 to make $8, or you want to risk $5 to make $100. But when the loss comes, instead of you to lose $5, you lose way more. You lose way more. You may want to lose just $5, but you ended up losing $50. Yes, it may happen. At times, you may even lose the $100. I'm saying this out of experience. Then for you to trade without these emotions, slippage do happen. Slippage do happen in the most brokers. Not even most, because there is no, as far as I said, it is technology. It may not be 100% certain. Something may happen. And then before they will fix this issue, your account is gone, your balance is gone. That's why at times it is not advisable for you to borrow to trade. So for you to grow your small account, you should learn to, if you have $100 balance and your initial risk is for you to risk 2% of that balance, which is $2. What I do, I like risking $5. Based on, if my balance is $100, I like to risk $5, and that $5 may be the only deposit I will deposit on my broker that day for me to trade. Then if I risk 10% per day, I'm going to deposit $10, which is 10% of my $100. And if I'm to risk 10%, it means if I'm risking $10, I should be able to make $100 that day, or more than $100. That is 1:10 RR. per day. But this market, you cannot control it. You can only do what you can do best. You can only follow what you see, and then you react. Then instead of you to risk 10% at once, you can bring it down to 2%. If you know how to re-enter a trade with that 2%, you can still level up to a certain point for that day before you close. So there's nothing wrong with you trying to start with a small balance to see how you can build that account up, instead of you to come in and you blow it up in a day, and tomorrow you will not have any other money, any balance for you to start trading with. So let me show you as an example what I'm talking about. Let me show you as an example. Maybe you want to trade gold, because as for me, I love gold pay. You should start. It's been a while, as in, it wasn't easy, but from next week, let me show how you can go through it. So let me go to my chart and show you simple thing you can do. Very simple you can do, especially if you are trading gold. Do this and see the result. So let's go to chart. I just want to use my mobile phone to do this quickly. So this is how you can build your small account. So let's go to our chart. If you are new to this channel, do well to subscribe, turn on notification bell for more tutorial videos like this to come. If you're already a subscriber, thank you for watching. Keep following this channel. So let me show you what I meant for you to bring your small account to a bigger account using this very example. Let me show you that. So as you can see, this is my moving average. Here is my moving average, and you see that this moving average is above this market. The moving average is below, meaning the market is above the moving average. And what I'm using right now, the time frame right now, it's M15, but it doesn't really matter. So what happened is, when I comes to this market, what did I see? I saw a break of structure to the downside. Everything is mainly structure though. So what happened? There was a break of structure to the downside. I'm using MT5 because I don't want the video to be too long. So I'm using MT5. So right now, as you can see, you see that this leg broke structure to the downside. Yeah, there was a break of structure to the downside. If I should turn this chart to a line chart, you will see that there was a break of market structure. Oh, that was indicator. There was a break of market structure to the downside at this point. So what happened? Let me quickly do something. Let me quickly do something. So let me mark this edge. So let me move down to M5. So at this point, let's see the place that I marked. Okay, this was where I marked, and the wick is your friend. So what happened? As this market pulled back to the wick, I have to place my trade. I'm going to place based on the money you are using. If I'm using like $5, I should be using 0.03. It may hit stop loss, but it's fine. So if I'm using $5, I should go with 0.03. It depends on your leverage. Depends on your leverage though. 0.03. So it depends on your leverage. So if I should enter trade at that point with my 0.03, my TP down here, I may TP the week as well. TP the week as well, or I'll TP it here, the last down candle before the up move. If I should TP there, you see that from that point till that point, I got $31 from my $3. I've gotten $31. Then another thing I will do is for me to enter a re-entry. Re-entry is very important, but note, at some point this re-entry will take out your stop loss, but that is market for you. So I'm going to go with my re-entry. On my re-entry, I'm going to double my initial lot size. Instead of 0.03, I'll be using 0.06 or 0.07. 0.07. Then on my 0.07, this is me entering based on engulfing candle. I open this trade based on engulfing candle. Then I'm still going to take my TP at that candle. And that candle right there is going to give me $59. That is $59. You get? That is $59. If you go to your 3 minutes, you may as well see where to enter a trade again. But for you to be at safe place, I'll say you should just go with the one you have already gotten. You get? So that is your $53 plus $31. You know what you got. So if you are to enter again, you see that you have $46. 46 plus 56, 46 plus 56, you know quite hard, you already gotten $100 just from $5 plus 31. You know that you've gotten more than $131 just from $5. So this is you using just a small time frame to do this. Like I said, at times it may reverse to take out your stop loss, but if you still want to use this same $5 to make $500, you can still do it just by trading gold. You can still do it. The only thing is you should have in mind that it's not going to be working out for you all the time. So that is to say, as you place this trade at this point, and you know quite all right, that first entry is going to give you $30. As far as you have this engulfing right now, as far as you have the engulfing, you just want this market to close below that green candle there. Let me mark it out for you first before we go to our 3 minutes and see something. Go to our 3 minutes. Practice mark perfect. So, because next week now we are going to be trading gold. Next week we are going to be trading gold. So let me go to my 3 minutes to show you everything. 3 minutes. 3 minutes. This time frame, let me go to setting. The time frame 3 minutes. Oh no. Ah, the time frame here, man. That means I'm going to turn this. So I'm supposed to go to 3 minutes. The reason why I'm going to 3 minutes is to show you guys how you can, once the market close below this 5 minute engulfing candle, this 5 minute green candle, once it closes, you enter with 0.07. As it close below again, you enter with 0.07. You know that 0.07, 0.07. As it close again, at this range, you need just three candle. Just three candle is what you need. So 0.07, 0.07, 0.07, you know what you are going to have. That is going to give you $50, $50, $50. That is 150. But for your final entry, you can wait and add it up together. 0.07 times 2 will give you 0.1, will give you 0.14. That is going to give you 0.14. With your 0.14, you know quite alright, you are going far from there. You will enter 0.14 from here, and your TP is still at this point. You don't want to be greedy so that the market won't lift you behind. You don't want to be greedy. you take your TP right there, and you know that you've gotten a whole $100 from there. So from $5 you could make like $300. It depends on your entry. I said it again. Your $5 can make you $300. And if you lose $10 a day, you've done for the day. So you can just try your best to build your capital just by trading gold. Just know what you are doing and know why when to re-enter a trade, and then you see how things work from there. So now you see that this market was still above this moving average. The market was still above this moving average. Just know what you are doing. This trading itself, it's simple. So the market was still above this moving average right here. And you see, it breaks above it and gives you this. It gives you this. So you can still take a trade right at this candle. And, you know, your first entry will be, now I'm showing you entry. Your first entry, your first entry will be around here. So your first entry will be around here. And as it closes above this, you need an engulfing candle, and the engulfing candle happens here. This is when you're going to enter your second entry, which is right there. And you see the TP $200 just from $5. You get just from $5. You made 200 right there. And let me say your first entry was right there, and that could be your, maybe you just TP 200. So just from $5 you can make more than almost $500 a day from $5. So everything depends on you. At this point you can see that it's not really the capital that is the issue. Just know how Just have that mind that if you lose this money, you have lost it. But with this money, this is how much you are going to make. But if you lost it, you know quite what you have lost it. So this is how you are going to trade. You don't have to trade with fear. You have to trade with budget. You have to treat it with like business. Like say you have $200 and you said, oh, your $10 is going to be your risk for the day. And if you place two trade, it doesn't go in your direction, you've done for the day. So you come to the chart, you define your entry, you enter your trade. You don't hold the trade for too long. This is because you are scalping. You just want to enter a day and step out, a day and step out. If you lose $10 for that day, you are good to go. You come back another day. So in a day, you can just make $200 in a good day. In a week, with your $100, you should be targeting $500 to $1,000 in a good week. So can we really take our $100 to a $500 a week? We don't know, but we can still try and see what we can do from next week from here. So I've been studying gold for a very long time because I have sat down, I checked and I checked properly. The only pair that can give all the money I want is gold. And another pair that can still do more is VIX 75, and that is a derived instrument, not this very one. So trading is something that you have to put your effort, learn it, and when you come up with something, you see how you can go from there. So you have to make sure that your re-entry criteria is it's something you hold. Whenever you are trading this, it's easy to follow, but it's about structure and when to look out for this structure. You may make use of your this moving average, but when I'm on my desktop, I'm not really making use of a moving average. It's pure structure, and I can show you how you can do that on your own. So God will give you a setup every blessed day. That is what I've been going through for the past weeks. I've been studying God for the past weeks. It can give you a setup every blessed day. That is what God does. You have to put your eye down, put yourself down, and see how this instrument moves. And see how this instrument moves. Gold moves from zone to zones, and that makes it sweet. If these zones got broken, you know quite all right it's going to these zones. Gold is very sweet to trade. I've been for past week I did not post signal, I did not do anything. I was just locked in watching the gold chart because I really love this gold chart. This is because I reached out to someone and they charged me $5,000 as trading fee. I'm like, what? Just to learn how to trade gold, $5,000? Wow. So I have to bring myself down and study this prayer myself. But looking at it now, this pay is the sweetest pay so far. So this is what I said. Let me brought to you guys. If you are new to this channel, please do well to subscribe. If you are already a subscriber, thumbs up and let us grow together. From next week, we are going to try make sure that you stock your account with some money that you know you can lose, because it either we lose or we make it out. So let's go.